For somebody picking up $1 million SDE business with 60 grand, of course, you're going to have some closing costs and whatnot on these, right? But as far as direct equity injection, assume that you might be able to pull it off for $100,000. That's a pretty strong. So I work for Acquira, and there's kind of a path to how I got to Acquira as well too that I'll share to give you a little more insight. But to kind of give you a background on what Acquira is and what we do, it's somewhat of an evolving, as many small businesses are, because we are like the small businesses we're involved in acquiring. We are a small business ourselves. We started in the space digital business acquisitions 6 to 8 years ago. That is what they were looking to do to help people identify, businesses in the digital space that could be purchased and reorganized or restructured or basically improved and then either held for operation or sold. They made a decision to actually make a change to brick and mortar, specifically in the home services space, MEP. We like HVAC, plumbing, electrical. We'll also look at a lot of specialty contractors beyond that. No GC directly related things, but specialty contractors in the home services space, small business space as well too. If we got somebody that's doing, say, plumbing and they concentrate on commercial accounts as opposed to residential, we're okay with that. But they got into this because they entered into a joint venture back in 2019 with another group where they used some Main Street money and picked up 3 HVAC and or plumbing companies. That is when I got involved in the beginning of 2020. I came in to do the integration work. I was a consultant, and they wanted somebody to come in and help to transition these from the owner-operated models they were into something that was management run. So I did that work with them for about a year, just shy of a year. At that point in time, the marriage that probably should have had a little dating before this joint venture somewhat dissolved because there's a difference in opinions on how things should be operated. So they kind of reduced it down to just a couple of people that manage those businesses. And actually, they're doing well right now. I think 2 of the 3 are up bottom line about 70% the last 2 years from when they picked them up. So, the work we did stuck in, and they're performing. But when Acquira came out of that, the decision was, we love this space. We love the brick and mortar. We specifically love the home services. We like the recession resilience. We like the narrative. We like the cresting of the silver wave. All of it makes sense. I went back to doing some consulting on my own, and then they called me back in here a little over a year ago and wanted me to run the ACE division, which is the Acquire Certified Enterprise, in essence, the change management portion. So over the last year, that's what I've been doing for them. Last quarter, we were involved in 12 acquisitions. We'll probably do another 10 to 12 here before the end of the year. I imagine we'll be involved in probably 30 or 40 next year. And our involvement is typically a minority position in these businesses. A typical structure would be a $3 million purchase price HVAC company, a $1 million SDE, normalized EBITDA business, selling at a 3x multiple. The structure is usually going to be an 80% SBA loan, 10% seller financing, 10% equity. The entrepreneurs that we bring into the system, and that's really what we do, is we help to teach these people how to find these businesses and how to acquire these businesses. If they present something that we like let's say this business I just outlined, we will take, it ends up being a 30% stake when it's all said and done. It's 20% preferred up front, but the exit is close to a 30. But we'll provide 80% of the required down payment. So on that $300,000 equity injection, we'll bring in $240,000 of it. So for somebody picking up $1 million SDE business with 60 grand, of course, you're going to have some closing costs and whatnot on these, right? But as far as direct equity injection, assume that you might be able to pull it off for $100,000. That's a pretty strong turn. When we are involved with the equity fund, we require that they use the ACE product and that my group comes in and we spend 8 to 9 months, combination of on-site and remote work, trying to get a leadership team set up and operating. And I make sure to tell all of these individuals that I'm involved with that the goal of this program is not to have them management run, it's to have them ready to be management run. Because, we get a lot of high caliber folks that come into the program. We have a lot of C-level execs. We have a lot of MBA graduates. And the first thing they want to do is just make all these changes, right? Here's exactly how it should be running. And the point is, man, you're just going to kill this thing. You have no idea how tenuous the situation is right now. This first 90 days is all about you tap dancing so that they understand who you are and they can trust you. So, we spend a lot of time working around things like that. But in essence, that's what I do for Acquira. And, that is how Acquira is set up. They're looking for these individuals that want to come in and purchase these businesses. And then we're helping to guide them through the process, and we'll take a minority position. Over the next 2 years, we're actually going to transition to where we'll start to take out some of those owners. We'll give them kind of the arbitrage turn to where if they can show us that the management-led transition has taken root, we've got some top-line, bottom-line growth, we'll take them out at a 5X. So typically a 3X entrance and a 5X on the backside, and then we'll be the operating company of choice. With the bigger picture for us is we want to run all that through an ESOP. So as opposed to some type of typical private equity playbook, where we're going to roll this thing up and then actually get it at 12 or 15X to the next biggest shark on the food chain, our anticipation is that we want to exit to the employees through an ESOP so that there's better alignment.
Okay, interesting. I didn't. That's a twist at the end. I didn't know that one. Yeah. Okay. And the exit at an ESOP is this: you fully exit or you partially exit?
It's a long-term exit. You figure, truthfully, it's probably a 20 to 30 year exit on something like that, right? As they're taking the little pieces as it goes up, we're getting paid. The value of the shares are increasing on an annual basis. They're buying shares off of what they're making, and it just, it's going to take time to do it. But in the end, we like that exit for us because we make money. That's what we're here to do, right? At some point in time, we're empowering and enriching the employees, which is ultimately who you want to see that go to.
And that operator, that buyer that came in, you're hoping that they will stay, or you're hoping that they'll just take their 5X and walk away, do something else?
We're modeling something right now we call our portfolio AE model, which is in essence this vision of a decentralized roll-up, where what we want to see is we want to see Jay come in and buy a plumbing company in Texas. We'd like to see you go through the ACE program. We'd like to see you over the course of 18 months, 2 years, get this thing up to where it is management run. And you are, this $1 million SD business is now $1.3 million, $1.4 million, something like that. We'll purchase it on that 5X multiple. What we'd like you to do, though, is stick around. You can have some retention. You'll retain some in it. We'll also start to set this up as you becoming an employee of Acquira. We'll be the CEO of that micro roll-up, because what we want to have happen is you'll reach out to us and say, hey, I'm looking for another plumbing business in Texas. And a big piece of what we do is, we are teaching our AEs how to find these businesses, how to vet these businesses and purchase them. But we're also helping them to get some of these deals under LOI. So we've got a pretty good broker network that we work with, and we've got a pretty good seller funnel, off-market stuff that we deal with. So the hope is that once you sell this back to Acquira, that you'll reach out again to the Acquira sourcing team and say, I'm looking for this $1 million SDE business in Texas again. We'll identify it. You'll be responsible for the diligence. Acquira will purchase it directly at that point in time. You'll have a small equity stake, and you'll begin to scale that roll-up in that Texas market space. And we'll look to do this in 25 to 30 MSAs across the country. So we've got our, our boots on the ground. You'll eventually have your own ACE integrator using our program. You'll eventually have your own team there. By the time you get to the fourth or fifth acquisition, those involved in the first one or two are going to be able to get these next ones up and running because you've been down this road before, right? You've got a team that's actually beginning to do this. So instead of this large operating company up at the top, which is the typical model, we'll decentralize that. So we've got people in those local markets that actually run the businesses.
And that first exit happens within how long? I didn't catch. You said 1.2.
I would say that you're probably looking 18 months to 2 years is my thought. Now,
Okay.
I will tell you, we're looking to do our first consolidation event here the end of the first quarter next year. We'll take on, I think right now we're looking at 8 businesses that are operating that we will purchase. That first tranche, that first group are going to realize an exit that's going to be within a year. And so it's going to be a pretty good deal for those guys because we want to get the ball rolling. So we're looking to say, hey, Greg, hey, Darren, Miles, Jay, congrats on your businesses. That's great. You've had these things up and running. You seem to be making good progress. I know you've only had it 8 months, but you're interested in your exit now.
Okay, interesting. That's pretty aggressive. And so why not allow them to operate and do the roll up within those individual entities before you have them exit and then roll up?
Because ultimately what we're looking for is we want to be the source of capital. I mean, we're going to do a lot of this with debt initially, but we want to be the source of capital. Right now, we use SBA as the backbone for this, right? Because all you guys are coming in and buying these things individually. And that works. And it's a great narrative. It's a good feel-good story, really, the way I kind of describe it. But on scale, it doesn't make sense.
It doesn't on scale in what sense? In terms of like rolling up, it doesn't make sense because SBA is limited.
For you, right? Let's say that you are the owner of this or the managing partner of this roll-up space in Texas. You're really only going to have one. You might be able to pull off 2 SBA loans at any given point in time before you reach your threshold. That it just becomes, it's not scalable as a solution. I mean, what we really want is we want you to be running this operationally and looking to us to help you identify the next purchase. And then once you're running through the diligence portion with us, then we will just purchase directly on that.
And then when that owner exits, the second purchase, is that also SBA? Does he go back and through the route SBA or go conventional now? Or 100%?
Yeah, you may do that second purchase through SBA or some type of conventional financing because obviously you've made some money on that first turn.
Yeah.
But more to the point, you probably wouldn't be involved in all at the purchase level. Acquirer would purchase that thing directly. You would just be managing it, and you'd be given a small equity stake in that business.
Interesting. Interesting. So it's almost like a model to acquire talent, if you will.
Yeah, that's what we're. Yep, that's a lot of what we're doing right now. You know, we've got our accelerator product, which is specifically trying to identify those individuals who want to purchase small businesses. And I'll tell you, I'm continually amazed at the caliber of folks we get in because we do a lot of it through Facebook. We do probably more through Google now, but we probably get 1,000 people that click through on a monthly basis who have interest in what we do. The sales team will probably talk to 300 maybe, and we'll take in maybe a dozen. And where it used to be, we take those people in as a form of cash flow. Now it's much more bidirectional. You know, we're looking for who are we interested in partnering with ultimately, because down the road here, that won't even be a product that we continue to use or to offer because once we've identified the 25 or 30 people we want to work with, we'll probably retain it in some sense, but it's not going to be anything that's with as much hand holding as we do right now. It'll probably be a learn at your own pace type of thing.
Interesting. So when I imagined our conversation, I thought that we would be more on the back end of the integration conversation where like what you're like known for. But I'm fascinated that you actually really know the front end side and you're involved in the front end side. So how did that transition happen for you?
Well, I recently took on a new role here at Acquire. I'm now actually the president of Acquire. So Hayden's up. has stepped up and out and looking kind of the
Congratulations.
operating company. Yeah. So through necessity, I guess.
Okay. Okay. All right.
Yeah, it's a small team, the leadership team. There's 6 of us that sit on it. I mean, as a collective group, I think we've got maybe 20, between 25 and 30 folks right now that work for Acquire. And when I say work, I mean, for the most part, everybody's independent contractors because we're spread out between Canada, Mexico, the US. It's a fully remote operation.
Interesting. Because I spoke to the guy on the other side of the investor relations side, and I kind of we talked about like the raising, the fundraising piece, and the terms and stuff. And it was very impressive guy. I can't
Just
remember his
me.
name. Yeah, very impressive guy. He knew his stuff. He was still new to the company, but he knew his stuff, and he had some very aggressive terms. Are you involved in that end as well in fundraising or raising capital for the finding LPs for the different funds?
That's Chris's side entirely. And yes, Chris is a highly competent individual. He came from that space. I'm sorry, I can't remember the name of the company he worked for that spent 20 some years there, but basically they were a large aggregator of, um, they put up cell towers. So they were seeking out landowners and, putting big, 100-year leases together for these. But he did billions and billions of dollars worth of this. So he's
Yeah.
highly knowledgeable, very skilled, and he did come up with some very novel terms, at least for the way that the equity fund worked for us.
Yeah.
I know we haven't had much of an issue subscribing because of some of the terms.
Got it. Okay. So yeah, it was fascinating. Um, so let's start with where I wanted to go with the
Yeah.
conversation is the integration piece. Are you an EOS guy, or where's your methodology framework comes from? Because I know language is very similar, but and I know EOS has just captured stuff from other places. It's not like
Yeah,
it's a novel.
yeah, it really does. And no, I'm not classically trained in EOS. I got out of college in 1992. I went to go work for a small bank in Southern California at the time. It was called Long Beach Bank. And while I was there, they became Long Beach Mortgage, and the next iteration became Ameriquest, where we had the largest lender in the United States, which happened over the course of 5 years, which was this massive undertaking, a crazy ride. I was a regional manager with those guys for a couple of years, and then decided, what the hell? I can do this on my own, right? I don't need to do this. So, from the time I was 25 on, I've always owned my own businesses. And through that, I learned the things that I teach now, right? Like a lot of us do. So, I sold my last business in 2018 and went right back into just direct consulting. I'd always done some consulting off and on for folks while I own my businesses. But 2018, I did it directly for a couple of years, and that's how I got to Acquire. So as far as the creation of the EOS model, or I'm sorry, the ACE model, yeah, I lean heavily on a EOS because it just makes sense, right? It's very straightforward. It's very simple. I'll even use the term rock, things of that nature because I just buy into it. Now, to my point again of what ACE is, I do make sure that people understand it is for the creation of the leadership team to be able to run whatever it is you want to run. And when I say that, I mean whatever book. If you're a Jim Collins guy, congratulations. If it's EOS, good for you. If it's whatever is the new and the great on the New York Times bestseller, great, you can do that. But until your team's ready to, don't touch it, right?
Yeah.
And that's kind of the whole point.
So let's talk about the process itself. So, how, like, as in your previous role, now you're present, but in the previous role as an integrator, what was the process like? How early in the transaction do you get involved? And then how do you look at it from the buyer perspective as well as the seller, as well as the business? So they're like almost like three different groups.
Get involved about a month before close, really after we've gone through final investment decision. The APA is signed, every term sheets are done, and we're moving forward with final investment decision. Um, Usually right before that, I will or someone in my capacity will go out for what we call a final site visit. And this is uh, part of the services that we offer for these individuals that want to use like some expanding coaching services where people will pay a little bit more because they want some direct hand holding. that site visit is prior to final investment decision. And that's, again, let's say I would go out to the business. It's an opportunity for me to meet the seller and a couple of key employees and just kind of get a smell test for the business. And I always come out of it saying I have a very simple metric, and that is, would I want to work for this business? Because if I come out of there and say I would not want to work at this business, that's going to be my red flag for everybody to take a look at. The financials may look a certain way, and the story and the narrative may sound a certain way, but when I step foot in that business and you get in there and it's got that smell, right? You're like, there's something not quite right here. And you got people that are, unkind to each other. You got a toxic culture. Those are the kinds of things that I really key in on. So that's kind of the reason we do the site visit. Now, I will say, 90+% of these businesses, it is news to the employees that this business is being sold, right? So when I say I talk to key employees, I'm very specific in how I approach that, because most of the time you're going to get pushback from the broker. Now, it's typically going to get come in the form of, the seller doesn't want to have you talk to. And, from an understanding, although a lot of it really is the broker just saying, please, God, don't do anything to blow this deal up because I can't afford to lose this commission, right? But I'm very specific in what my ask is. The ask is that I am a potential investor in the business. Before I invest funds in it, I want to understand a couple things. There's a couple key employees. And if you as the seller can't pull that off, that's another red flag for me, right? So we are very specific, or I am very specific about what I request and what I actually require on that. Because if I've got a seller who won't let me talk to key employees, again, it's ultimately Jay or Greg, your decision. But I'm going to tell you, I don't know. To me, I just don't like the smell of that.
Who are the people that you want to talk to?
The key employees, the individuals where if they left, they went to a competitor, they started to back solicit anybody that's going to be the potential downfall of that company. Your ops manager, your sales manager. If you've got an actual controller, let's say in a small business, somebody that fills multiple seats and wears multiple hats, that's who I want to talk to. And the questions are going to be very straightforward. I mean, Greg's the owner right now. Jay, you're the new owner coming in. I come in to talk to Greg and talk to Greg's employees. When I talk to RJ and Darren, who are key employees, I'm going to ask one of the questions: what does this business look like if Greg's not here? I know he's 60 years old. I'm sure at some point in time he's looking to leave. I want to know who else can step in here. Who's the next leader? What does it look like here? Right? I'm going to be very specific in my questions because, I'm not lying about being an investor. We will be investing in it. It's just, we've got other guys going to be investing 100%.
Yes. Okay. Okay. Oh, the story to the employees that you're an investor, you want to invest in the business, you want to meet the key employees. Makes sense. Got it. You don't like the consultant route? You like the investor route better? Why?
Yeah. Because it's true. We are going to invest in the business. And the way I come off to is, I grew up in a small town. I grew up in a farming community. So, I've done a lot of wrench turning. I understand what it's like. So when I come in and talk to these small businesses, I can typically relate directly to them. And I'll end up saying, this is my money. I got kids going to college, right? What am I looking at?
Yeah.
I want to be direct. If I come in as a consultant, who knows what they're going to tell me, right?
Got it. Yeah. Okay. So you try to get empathy from them with you, and want to help you out. Tell me the bottom line. Okay, makes sense. And so, okay, and then so you get this smell from that conversation, or just the walkthrough, or from trying to understand the operation, or
The whole
or a
thing.
combination of everything.
Yeah, a combination of everything. Just definitely in communication with the key employees. I do want to see it operating. I want to see it on a normal business day. Coming in is, hey, can you do it on a Saturday? Yeah, if you guys work on Saturdays, but if not, no, I want to see what it looks like. I want to, do I have people yelling at each other? Do I have somebody back there smoking cigarettes? I mean, I want to see what's happening here, right?
Yeah.
Because I know I'm going to have to come in and deal with these people. And if it's a culture problem, I'm going to be expected to fix it. And
Yeah.
there are things that you can fix in a business. Culture is the most difficult, right? So that's the first 30 days prior to close. When the business transaction actually closes, when funding happens and the announcement happens, I'm going to be on site for that. That's part of the service we offer to our AEs is I will be there standing next to you and the outgoing seller when that announcement's made.
Let me go one step back. So that visit that you do, the site visit, is that your operational due diligence, if you will? Or
Yeah, I would say that might be the best way to phrase it. But really, you guys have seen the financial aspects. You've had conversations around how things operate. You should have seen org charts. You kind of see it all. I just really want the interpersonal communication. I want to see how people treat each other. I'm there, and then the operational side. Actually, let me take it back. That's probably not the best way to phrase it. For me, it's the cultural diligence. That's what I'm really there to see is what does the culture look like.
And you do that with the potential operator, or you do it by yourself?
I do it by myself.
Got it. And do you recommend? So by then, did the operational operator do that already?
Yeah, oftentimes that new buyer is or what we call our acquisition entrepreneur, the AE, has been there in person once or twice. How they've been detailed to the staff, I don't necessarily know what that is. There's all sorts of stories that people use and to be able to get through it. But they're, Greg, if you're buying this business, you're just jacked up. That's the only thing you're thinking about. So you're involved in it. You're digging through the financials, your diligence, you're digging through all the operational. You're having these conversations with the seller. I mean, you're geeking out on this whole thing, right? But it is that cultural portion that gets missed, and that's really what I'm there for. So yeah, I will look at things operationally, but I know that I'll never get to those things if I can't get over the cultural hump.
Yeah. And how do you know that balance or that line between, few bad hires and a bad culture? Because you can have a nice culture, but have a couple bad hires because the owner has kind of like been out of the picture for the last couple of years or year. And then, the GM is still learning how to hire good people, and he made a mistake on one or two people, and you could walk through, you could tell already who is what. And how do you know that difference?
Through the questions of both to the seller and to those key employees on asking simple things like, how do you deal with a job that goes sideways? How do you deal with a bad review? Do you have employee reviews on any kind of regular reoccurring basis? Do you have any kind of reoccurring basis for just communication in general with it? Do you have a leadership team? Those types of things that just give me a little visibility into how things work from that cultural perspective. And then when I talk to the key employees, it will be questions like, who do you have here that are leaders? Are there, you don't have to name names, Jay, but do you have people here who are a problem? Is there any toxicity? Do you enjoy your job? Do you like coming to work? Why do you work? These types of things. You get enough of that and you'll just get a bit of a feel. Now, to your question of how do you know when it's too much to overcome? That's obviously very subjective, but if I've got a seller who's leaving and there's an ops manager who holds the master license and no one else has it there, and they also are the overwhelming source of experience and education around what it is we do, and they're just a son of a bitch, and I mean it's apparent. Then that's probably one I don't think is worth overcoming, because when you think about it, you can say, well, we can replace that person. That's the whole company. I mean, when the owner's walking and that's the other person that's there, all you've got is you got a bunch of good people for sure, but they can't do what that guy does. They can't move this business forward without that individual. So now you start relying on what I call the magical GM bullet, right? Because everybody wants this. Well, I'm going to get in there and then I'm going to find a really good GM, right? And I'm asked this question over and over again. Brian, how long do I have to be there before I can have a GM in to run this thing? And, which I love to close. You mean so that you're sitting on the beach collecting the paychecks and not doing anything? Is that the question on this thing? Why you have a $3 million SBA loan your house is tied to? Um, yeah, you better expect to be there for at least a year and get your fingerprints all over this thing. But when you start expecting you're going to bring somebody in, again, that just ratchets up the risk because now this person's fingerprints are all over. They are the leader of this business. And as they go, as goes your business, right? So that would be an example of one. Another would just be maybe you've got a sales manager who's just a salesperson. They're really high maintenance, but they're not well respected. You get this feel that they're there for just the money. They're always being headhunted and they've got a good friend that owns another company doing the same thing, that there's always this thought they could go to. There are no non-competes in place. The things that, again, just feel like this is a real slippery slope. This person doesn't feel solid and I don't have any protection around this. And if they do go, this is going to be a tough road. Those would be places, because there are lots of businesses, that you guys will see and that I'm involved in that are strong generational businesses that just are good, solid people that are supportive, and you can feel it when you're there. If you are there and it doesn't feel good, that's just the biggest of red flags.
So the risk on that particular one, which is I love, the risk on that one is that there's a lot of emotional connection to the ownership. And so there are a lot of people that have been there for 20 years. There's some people that have taken less money. That probably the reason why that business has had much higher EBITDA margin than the industry is because there's so much love and people just love the ownership. They love the husband and wife running the business, that when they walk away, they essentially lose that love. And then they start looking. I was like, well, if they're not here, then maybe I need to get a raise or I need to go somewhere else. So how do you identify that and how do you overcome that?
Well, that is a big piece of the diligence in buying this, is understanding who that owner is and how they operate.
Yeah.
I just got back from one where one of the things the employees were really freaked out about was they're used to getting bonuses at random times of the year, no rhyme or reason. They were all cash, and it was just whatever he decided to pay. And that's tough to follow up on, right? I mean, number one, cash.
It's some of that one, yeah. Yeah, it's someone that came with cash and just start handing out cash to the employees. I literally just saw that a couple of weeks ago.
Yeah. So, trying to find some way to walk through that and explain to them, yes, we'll do bonuses, but they're going to actually be, paid to you through a check. We'll keep track of them, and then we'll have kind of some metrics around them, which is, again, that word, metrics. These people don't know what that is. And boy, that sounds like some kind of, corporate speak at that point. I'm not interested in it. It can be difficult to get through those types of situations, let's say, like that, but it is important for you to understand how that owner runs the business. When you find someone where the employees all respect that individual and they do work there because of that individual, then you better have a very clear idea of what they stand for, because that is the blueprint of the culture. And if you come in and you try to, transition it to something that you feel will work better, because it's not efficient, or it's not the most effective way, you may be right, but you're going to miss the bigger picture.
Correct. Yes. What I found is that sometimes that person that brings a lot of that love, he loves on the employees. The employees are also sometimes complaining about something that he misses or a couple of things that he wasn't doing. So if you can close the gap on those two things, you can bring value, and then just be nice. Don't be an asshole, and try to keep up that lovey-dovey kind of vibe that they have.
Yeah, a lot of times it's going to be just that they just didn't follow through. Because listen, they founded this thing 33 years ago. They know everything about it like by the back of their hand, and they've been making, taking home $1 million a year off of it for the last 6 or 7 years.
Yeah.
why do they want the headache of making changes? I mean, all these things that people bring up is like, oh, that's a good idea. But unless there's somebody there to actually implement them, if it's on them, and
Yeah.
you guys know most of the time it is on them because they don't have a team,
Yeah.
it's not going to do it.
Yeah. And they've tried so many things in the past that didn't work, so it's not worth it anymore. So okay, so now let's go back to day one. So now you're in day one, you're there. What's your approach in front of the team? You're announcing this is what's happening. What's your approach? Do you go one-on-one first and then go group? Or you go group then one-on-one? And what's your play?
I'm going to do one-on-ones because typically it's going to be that announcement, the outgoing seller to the new owner, draws hit the floor. Maybe somebody had an idea, but most people don't. It's usually very emotional for the seller. And I don't like these to be done on, say, Thursdays or Fridays. I'd rather they're be on a Monday or Tuesday type of thing because I don't want people going home after this and stewing on it all weekend because they will.
Yeah.
But what I'm trying to do is get through as many one-on-ones as I can as quickly as I can in that first day. And it's going to be with the core key employee team, first and foremost. And the point is to say, hey, this is who I am. I am not here as part of ownership. I am here as a consultant to help with the transition. My job is to find out from Greg, the guy who started this company and who's selling it today, which I understand from talking to everybody is a dynamite guy. I'm trying to get everything I can out of Greg to distill it down to RJ, who's the new owner that's coming into this business, and find out what we can do to support you guys as best as possible. So I am looking to help RJ out here, but I'm also really looking to help Greg as well too. So I want to be that piece in the middle where you can communicate with me and tell me what it is that's actually going on. And again, you have to have a high level of emotional intelligence to do this. I mean, I can't really tell you what to say. Every person's going to be different when they come in the room, and you have to be able to understand how you communicate with that individual. Some of them are going to be really pissed off. And they're not going to have any interest in talking. And it's going to be a very different conversation to try to get to where we need to be. But more than anything, I want them to understand that the intention of RJ is to have this business run as well as Greg ever had it run. And what we really want to do is empower you as an employee. We want to listen to where your struggles are at. We want to try to find ways to make this a better business, not for profitability, but for you. If it's better for you, it's better for your families, and then ultimately it's better for the community. And once we hit that point, then we've got a better business all the way around. And by default, we're doing better. But that's the path we want to take. You get people turned on to that and actually beginning to see that that's what you're looking to do. That's the path. But more than anything, I just want to hit those key employees first so I can feel, do I have someone who is potentially leaving? It's a potential problem. Whatever. I want to gauge that as quick as I can. And then I want to move through everybody I possibly can. I spend time in trucks going out in the field with guys, just service techs, plumbers. I definitely want to do that. I also, I make it a priority to talk to the shortest tenured folks there that I can in day one. If I've got a couple of people that have been there a month or so, I definitely want to talk to those people because they're going to actually tell you who the prick is, right? They're going to tell you what's really going on because they're not, they have no history, right?
Yeah.
Which to some people is a little counterintuitive, but I'll tell you that's an important person to talk to because they're going to be very blunt in their assessment of what's going on around there. This place is a shit show. I mean, there's no systems, right? Because they have no ownership in anything.
Yeah. Yes. And they haven't developed networks yet. They haven't aligned themselves with anybody. So you do that before you talk. You do the group talk. Okay. So how long do you spend doing that? The one-on-ones?
All day. I'm there all day doing that. I probably 15, 20 minutes, half an hour, maybe something takes 45 minutes. Again, gauged on what the person wants, what that conversation is like. I want them to trust in me and what is happening when I'm done with the conversation. Now, that doesn't mean that I'm going to get that, but that's the road I want to go down.
And you don't want any surprises when you do the group talk, and you want the main guys to be standing there nodding as opposed to like pissed off or giving you looks or not showing up.
Well, and the way this goes is that group talk, that seller saying, "Hey, here's the transition and here's what's going on," that happens first, right? That is the first thing that happens. So even key employees are going to be just blindsided, right? So there's this. It's stressful. I mean, it just is. You can feel it. It's very palpable in the air. So I want to try to get to those people as fast as I can, and then by the time I get into day number 2, I'm going to spend some time with the seller and the new buyer. And that is kind of the development of the succession plan. I want to download, tell me everything you do, everything you touch. What do you do throughout the day? And as he starts to detail processes, he or she, then that's always my next question is who can do that? Who else is involved? Who can do this? Where I want to identify all the gaps, right? Where is this person indispensable? Part of the contract that you end up signing is going to be how long that owner is there, right? How long are they there to help? I got done with one here the other day that was written up that they would be there for 90 days, but they had a hard date. And then financing kept pushing this thing back to where in the end it's 2 weeks.
Oh,
Right.
okay.
Which was a problem. But I see a lot of them where it's like, and we'll say draft it for as long as you can, just start with. But seeing these ones where it's like, well, I'll have them there for a year. If there's an earnout or there's something that they do, this is a cabinetry design business and they're an artist and they listen, man, if you can just take all of the HR off my plate and all the people management and let me go in the back room and design stuff, I'll stay for years, man. I love to do that. If that's the relationship, that's fine. But if it's just this transition as the GM, as the owner that touches everything, and then how long do they need to be there? A year is never going to happen. I would say probably 90 days is really about right. And you could say I would say 90 days full time, 6 months worth of that next 90 being on call, on demand type of thing. But if you've got a good business with a good team, by the time you hit 60 days, everybody's ready for the owners to leave, even the beloved owners. It's just because they've all started to understand, hey, man, we're actually going to make some changes here. We've been talking about making, and they start to feel bad because those changes are happening in front of the previous owner, right?
Yeah.
So the dynamic starts to change.
Yeah. And so how do you set expectation with the seller and that meeting with the seller and the buyer? How do you set expectations?
Well, knowing one, what that transition looks like, right? How much time we've got to work with, but two, is just through that conversation of what they do, really telling us how long or how difficult this is going to be. Because if they are intimately tied in to all of the moving parts and they've got very few people who can actually take this on, then that conversation, gets much more down to the operational side. All right. Are we going to train somebody up from scratch? Are we going to have to go out and try to bring somebody in? But let's detail what this process looks like from start to finish. And then let's detail what this job description is for this person and determine again, are we bringing them in from scratch, or if there's some level of expertise or experience to it, or does it come from the outside? And then having the owner really start to explain to you how long that's going to take, right? Because they know. This is something I will say. This is part of the emotional intelligence portion. Everybody you're going to deal with there knows that business and they know the answers to all of the questions you have. And try for the life of you not to tell them the answer to anything. Because as soon as you start telling them where the problems are at and how it should be done, you're an asshole. And you're going to have a real hard time stepping out of that. These guys already know what the problems are and they really know what should be different, or at least that something needs to be different, right? I spend a lot of time as we're getting into the meat of these engagements, doing a lot of process mapping, and I'm very specific in how I do those. In that, I'm always asking, how do we do this right now from the very beginning to the very end? Whiteboard this stuff out. I'm always getting people to say, yeah, but we should. And it's always hold on to that, table that, put that to the side, get to the end of the process and ask the question, how does this look? And 100% of the time, somebody says it sucks, right? It's like, yeah, okay. Well, then the next question is, what do we do? What are the changes we make? I don't have to give them anything. They already know it. They already know all of this, right? So this is the same thing when you're going through and having these meetings and you're having this discussion with the owner, what the succession looks like. They know it. You coming in with all of your expertise and telling them is not going to benefit you or any part of this engagement. So ask questions, listen. The Socratic method more so than anything else. They do know the answers to it. So we spend a lot of time with that succession, or when I say a lot of time, it's usually 2 to 3 hours at least, kind of getting it fleshed out, knowing that that seller is going to be there. So this is going to continue to iterate as we go forward, but I definitely want to get that. I'm going to start going through kind of some audits on like the IT, who manages it, who has passwords. That, that's a big one, right? Who's got passwords here? Who runs all of this? Is this somebody that's offsite? Is this part of the staff? Is this somebody who could leave? I'm going to look at operational audits. I'm going to look at sales process audits. I just want to get a real good understanding of how we do things. And I really start to identify the core processes that we have, maybe 5 or 6 core processes, so that I understand these are things that we're going to look at within the first 60 days as well.
Okay. And that's all day one?
That's going to be the first two. Yeah, day 2 is when I'm really doing most of that. And I'm usually there 2 days, maybe part of a third day, depending on the size of the company or where it's located at. But more than anything, my hope is that by the time I've left, people understand what my position is, that I'm going to continue to be involved, and really what the new owner is looking to try to do, and that it is not make a lot of changes. There are going to be changes. Listen, we got a new owner. It's just going to happen, but we're not coming in to change the way you do everything. What we do want is to try to take care of some low hanging fruit. You know what? Everybody bitches about their uniforms, that they got to take them home and wash them every week. You know what? We're going to get a service to take care of it. Let's get some wins right off the bat, things like that. Right?
Yeah. Yeah.
But that's what I'm going to try to get done when I'm there on that initial couple of days.
And then so what do you have the acquisition entrepreneur do after that? Do you have like a list for them to do, or what's their focus?
Yeah, I've got this whole kind of syllabus of all of the things that we can do with an ACE engagement, but these are not what we're going to do. This is kind of part of the grab bag of what we could do. And I've got some suggested timeframes in there, but all of these things are very prescriptive, right? You don't understand what you need to do till you get there and you spend some time there.
Yeah.
So over the next month, I'm going to be meeting with that AE once or twice a week remotely, calls like this. And we're just going to start to go through what we need to take care of, right? As things are happening. I'm also introducing at that point in time the finance integrator, because there are a couple other people I bring to this. We've got somebody that serves as a fractional CFO, and a finance integrator. They'll come in. We've got a people and culture integrator that comes in. Now, people and culture to us is, you hear me say culture a lot. It's not HR. It's beyond that. When you come into a small business, HR is the gal at the front desk who's the most organized. It's HR. So for us, yep. For us, it's that person that we typically is going to be our first outside hire. More often than not, it's a female. More often than not, they're typically younger, and they bring a lot of energy, and they're looking to find ways to improve cohesiveness as a group. And they're looking, ways that we can improve the way that we do things around the HR component, right? And we've got a big framework that we've built to kind of teach them all of the things that they need to do. But that's a big position for us. So we've got a people and culture integrator as well. And then we've got an integrator that helps on the marketing side also. Theirs is going to be a little more, let's just take a look at what we've got, and then That's something we'll get a little more involved in after the 90-day mark, because we're not going to do a bunch right off the bat with that.
Yeah.
At about the 60-day mark, we'll bring in an operational expert on things to be kind of that ops integrator as well. So there'll be 3 or 4 different people that are working with individuals there or the leadership team directly. But it's always going to be someone in my capacity that's the lead integrator that's kind of responsible for keeping the whole group on point. But, early on, it was just me. But it's not cheap. We charge $150,000 to do this, right? And most of the time, a lot of this gets overfunded. But and I make sure to tell them this is insurance. I mean, really, this is what this is: insurance in your investment. But I want to make sure we provide as much value as possible. So I bring a lot of extra help in on these also.
That operational integrator that you bring in at 60 days, is that an industry expert from HVAC or from plumbing or whatever? Okay.
Yeah.
Okay.
Yeah.
All
I'll use a couple of different groups that we develop some programs with, like I like Blue Collar Success Group. They do a nice job for us. I'll bring in outside groups that I trust, and I know that they know how we work. I know how they work, and I really want it to be focused around that industry specific. I've got a couple guys that are fabrication guys. If we're talking about granite countertops, things like that.
And how many industries? So I know that you guys concentrated on industry, 4 or 5 industries. Like if you were to look out, 5 years from now, are you going to be concentrated or are you going to be a little bit more broad? And then if you were to concentrate, what are the 1 or 2 segments that you will concentrate on?
We'll be more broad. And this is a big thing I've always pressed on as an integrator. It doesn't matter what the business does. It's the same underpinnings. I see this, especially when I talk about culture, which I believe is paramount to the success of the small business. If you've got a strong culture, I can fix most of the problems. If you've got a company that's got a poor culture, I'm going to tell you just not to buy it. I don't care what the financials look like. I mean, there's just a waiting disaster here that's going to happen at some point. But I am very interested in strong businesses. If you show me a narrative where I've got a business that's been around for 40 years and it's got some kind of unfair advantage within it and it's doing well and I see a clear path, I'm interested, right? And I've already got the experts there that know how to do this. So it's not like I'm having to learn everything. So we will be much more diverse. The reason why we initially really were focused on, the recession resilience businesses is there's just an opportunity to cash flow. Well, there's a number of great reasons to do them. But part of the narrative also was our ability to acquire capital to generate equity to be able to, to use the cash on these deals, and having that narrative that was a little more well-defined made it much easier. But as we have, success in what we do, we will expand it out.
Yeah.
There will be some things that we still end up saying, if we had our choice, these are things we'll pursue, but I'm certainly not going to dissuade someone who can show me the reason why this business outside of the scope makes sense.
How many businesses do you have right now in the portfolio?
We're involved in about 15 right now. Like I say, we'll probably be about 25 by the end of the year, and we'll double that next year.
And how many have gone 12 months, if you will, or more than 12 months?
I think 5, maybe 6 at the current moment. And it's outside of the joint venture that we had, prior to. Those businesses are all got 3 years under their belt now.
How many of those?
There were 4 of those.
Okay. So let's say there are about 10 of them. If you look at the 80-20 rule, how many are going to be outstanding exits? How many are going to be middle? How many are going to be terrible, shouldn't be in that business with that person?
Well, if you're looking at 10, you're just about right there. I've got 2 of them I've got questions about, right?
Okay.
One of them was a bad purchase. I would never have suggested this be a purchase. And the other was just not a strong AE. Somebody who had 4 kids and a 5th on the way and just had too much family, picked up their family and moved 1,000 miles to a new business. And I'll tell you, SBA tracks data. And if you talk about default, that's number one, relocation.
Oh, really? Wow. Okay. And then, and how many are massive going to be like hit it out of the park, like incredible? Can imagine to be.
Six I can think of right now. And then again, two of those, of that eight has potential for it.
Yeah.
It's just, are we going to have enough growth on the leader? Which is, to my side, that's a lot of what I concentrate on. I spend a lot of time mentoring. It's a lot of leadership. Even when you get these people who come in that are strong leaders with a lot of experience, it's a very different dynamic to come into a small business with people that have all known each other for 20 years and you're the outsider coming in, typically without a lot of direct industry experience too, right?
Yeah. Yeah. That's awesome. Do you guys have any questions? I know I saw a hand raised by Adam earlier. And
Yeah, I was going to say just on the enter, we'll run this out usually 8 to 9 months. I'll be back on site usually about the 60-day mark to do a workshop for a couple of days. We'll do a lot of mission, vision, value type of stuff, some goal setting, rocks, things like that, EOS driven things.
yeah,
We'll start getting in over the next 90 days. We'll get into a lot more foundational things for the business, making sure that um, we're budgeting, making sure that we've got a P&L that the leadership team backing up to that. At that first workshop, we'll ensure that we've got a leadership team at that point in time that's been created that attends the event. Going over those next 90 days, we'll make sure we've got a P&L review on a monthly basis for the leadership team to actually see. This is a big sticking point at times for owners. Like, I don't want to share that data. Like, listen, I can assure you these people know how to do simple math in their head, and the number they have is probably larger than the number you're going to share anyway.
yeah.
So, having that transparency is a big deal. Demand planning, cadence of communication for direct reports to supervisors, just fundamental things we'll do. We'll have another workshop, second workshop, usually 90 days after the first one, and then the last workshop 90 days beyond that. So it's typically pushing about a 9-month thing. And we'll just get into more, concrete operational things as we move forward. But the first 90 days or so is definitely going to be a lot of touchy-feely, a lot of culture-driven things.
So your process is about a 9-month process, first 90 days, and then you do 2 quarterlies, if you will. And then how do you get involved after that?
Beyond the 90 or beyond that 9-month period of time, if we're invested in the business, they'll just continue to reach out. I mean, if they want someone to come out on site, we'll figure out something that works fee structure wise, because it's not free, obviously. But if it's just communication, a lot of the A's communicate back and forth with each other anyway. A lot of them came through the same kind of cohorts and workshops before they bought businesses. And we'll put a lot of them together anyway, saying, hey, Jay, you should talk to Darren. You guys have the same businesses here on opposite sides of the country. And then, I'm always available, and guys on the team are available, because typically the questions or things they need help with aren't earth shattering. They're just going to be, they want a sounding board. And again, I will say that, and I get all sorts of people that laugh. I'll do usually a call every 6 to 8 weeks on the weekly group calls. I'll be a guest and talk about ACE. And I tell them that the majority of my job is therapist. I mean, I spend a lot of time doing that. Because it's tough, man. If you got a partner you come in with a business on, you're already a leg up. When you come in on your own, it's a tough road.
Yeah. And how many of you, or how many people do you have on your team? Now, you went to a different role, but how many integrators do you have?
I've got 3 guys.
Okay. And how many businesses can they handle at one time?
4 to 6 usually.
Okay. So with that group, you can do the 30 transactions very easily.
Yeah, because again, they don't last a full year. It's 8 to 9 months, and we're also going to be looking to kind of condense this down. We're always iterating. We've got a product that we have now where individuals that want to find businesses, but they just don't have the time. They've got more money than time. We've actually got a product that will get a deal under LOI for them. They pay us up front. And then we'll develop the investment thesis and we'll get a deal under LOI, and then we'll help them through the diligence portion. With that piece of it, we'll actually teach a lot of the ACE while they're waiting, because it may take us 4 to 6 months to get something under LOI. So while they're waiting, we're probably going to do a lot more work around teaching them what's going to happen once they do have the business.
Got it. So the ACE program is included if you guys are invested, and the investor, they have to bring in 20% of the equity if the total cost of acquisition, I'm assuming, including due diligence and everything. Is that correct? So you guys are paying 80%, putting 80%, but in addition to that 20%, they have to bring in a fee for you guys, or no?
No. Actually, with product I just talked about, we kind of call it our done with you product. We'll have it for probably the next year, and then we'll shut it down because it makes a lot of sense for people, and it's profitable for us. But in the end, it's going to kind of cannibalize what we want to do. But it ends up being a situation where we say for $100,000, we'll do this for you. What that means is, Jay, you're going to bring in $50,000. We've got a contract that says we've got a year to get this deal under LOI. We'll actually get a couple deals under LOI. You can back out twice, and then after that, it's like, listen, you're on your own. We've done it twice, but that first $50,000 is what we get paid up front, and then we've earned that after we've got the deal countersigned under LOI. The next $50,000 is us guiding you through diligence, and we pick up the cost of the Q of E, of the due diligence, of the legal, and we'll walk you through it. But the part that makes the most sense is the understanding that SBA does not require you to come in with this cash as down payment. It's just part of what's been paid into the acquisition of the deal. So the $100,000 that gets paid to us is counted by the SBA as $100,000 towards equity.
Oh, really? Interesting.
So it's a fee that you pay us. It is part of this down payment, in essence, that you would be paying to SBA anyway.
Got it. Because I spoke to someone a while back, and it was explained to me. I came out of that conversation thinking that in addition to that equity portion, you had to bring in another. It was $100K or so, or 150. I can't remember what it was. And it was just a fee, and they were like, what kind of like counterbalance the whole point of doing that partnership. Okay, so it's not
done with you type of program. It's a situation where you can find that $2 million plumbing business, and you pay us the $100,000, which is 50 up front, and then 2 more phases of 25 on the diligence phase, and then 25 for the final investment phase. And in the end, the equity fund's going to come in with 240 on that. You're 60. You've already spent 100, so you're done. You're not bringing anything else to the table for the SBA.
Got it. That makes sense. Okay, yeah, it's an interesting program. I'm fascinated by the model. I definitely, when I spoke, the people that I spoke to on they seem to be competent and they seem to be strong. It'll be interesting to see how it plays out over the next few years. And are you state specific?
I'm excited to see that myself.
Yes. Yeah. Are you state specific, or you go everywhere?
Yeah, we go everywhere.